Hello everyone. India Ratings and Research has come out with a structured finance outlook for FY23, focusing on asset class performance, the rating outlook for securitization transactions, as well as the trends in the Indian securitization market in the coming year. Now, most asset classes are expected to show a neutral performance. And when we say neutral, it means that the performance of the asset class is recovering as compared to FY22, but it still may not be back to the pre-COVID levels. The rating outlook for the agency-rated transactions is also stable across all asset classes. Now, this is largely driven by improving market sentiment, which is leading to a rise in the collection efficiency. Over to Payal now, who will talk about the outlook for securitization market in India.
Thanks, Rajashri. So going back a little to second half of FY22, the country witnessed a gradual recovery and disbursements picked up as lender confidence kicked in. After the subdued April and May 2021, securitization market also gained traction, boosting the estimated volumes for 9-month ended FY22 by 55 to 65% year on year. Looking ahead as well in FY23, we expect securitization and loan transfer transactions, along with the co-lending arrangements, to remain an important liquidity avenue for non-bank lenders, especially in a possibly increasing interest rate scenario. In addition, securitization provides further security in the form of credit enhancement, making it more attractive for investors. Also, we expect liquidity for residential mortgage loans to improve due to favorable revision in the RMBS requirements, what we have seen in the recent updated guidelines. Now, when we talk about performance of securitization transactions, while the delinquencies remain higher than pre-pandemic trends, but the overdue loans in softer buckets have started to perform. Also, there's been support in the form of restructuring, extension of ECLGS scheme, other benefits by the government to the MSME sector, which offer immediate liquidity to the borrowers. And these have ultimately enhances the performance of securitization pools.
Yes, that's right, Payal. Now, another trend which will help in improving asset performance is the digitization of lenders' processes. Now, this will aid in reducing turnaround time, both for customer onboarding as well as for collections. Now, also in the recent budget, a provision has been made for 150,000 post office accounts, which are to be connected to the banking system. And also, there are plans to set up digital banking units in rural and semi urban regions. And so, these measures should further improve the collections and should lead to efficiencies in securitization, especially for those asset classes and transactions where borrowers are largely in the rural and semi urban areas. Now, moving on from here to specific asset classes, let's start with the commercial vehicles, which take up the largest share in the Indian ABS market.
Yeah, for this asset class, we continue to keep a neutral outlook for FY23. This is driven by economic recovery and improved people mobility. Having said that, supply side pressures, including commodity inflation, shortage of semiconductor chips, are still few growth constraints for the sector. Also, monitoring evolving demand for subsegments such as passenger buses and school transportation that were impacted as shared mobility faced challenges due to the pandemic. It's really crucial to monitor that now. So this was about vehicle loans, but this time we have had a varied outlook on the unsecured asset classes. While our outlook on unsecured business and microfinance loans have been revised to neutral, our outlook on unsecured consumer loans still remains at deteriorating. You want to throw some light on that, Rajshri?
Yes, thanks, Payal. So, while the unsecured business loans have underperformed during the pandemic, now issuers have tightened their underwriting policies, and in many cases, they have now stopped disbursing unsecured loans to the high risk sectors like hospitality and travel. Also, as mentioned by Payal earlier, The extension of the ECLGS schemes, as well as the other credit schemes by the government, should help this sector as well. Microfinance loans are also expected to stabilize. However, it's the unsecured consumer loans, especially originated by the non banks, which continue to show elevated delinquency levels. We believe that the revival of consumption demand on a sustained basis would take some more time, barring the occasional COVID induced spurt of demand. Now, to wrap up this podcast, Payal will talk about what to watch in the coming year.
So, looking ahead, we expect firstly, possible interest rate hikes could lead to higher indebtedness at the bottom of the pyramid and would also reduce prepayment in longer tenor securitized pools. Apart from this, movement in international fuel prices is crucial, which will ultimately impact the economics of borrowers. Also, as mentioned earlier, role of digitization is bringing efficiencies in securitization is something to watch out for. Lastly, I think impact of possible changes in pool selection filters due to improved market sentiments on overall securitization asset quality is a key monitorable for next year, Rajshri. Um, so we have tried to cover the salient points of the report here in this podcast. We hope you find it useful. The report is available for download on our website now. Thank you all for listening.